Recording in progress.
All right. Little face down right here. And let the slideshow begin. All right, guys. So my name is Conrad Van, the Mortgage Man. That's my Instagram. Masterclass today is going to be called a Refi Ready. So this is all about refinancing because a lot of people interest rates are dropping. So I want to do this masterclass for y'all. I'm gonna put my head like right here. Hopefully I'm out of the way. All right. And let me move this down a little bit. And we will get into it from there. All right. All right, so what we will be covering, so in this class, I'm going to go over what a refinance is, the benefits of refinancing, what determines the interest rate, where do you go to refinance, the types of refinancing, qualifying for refinance, reviewing a loan estimate briefly, and then the documents you need for a refinance. All right, so first question. I want to hear, how long does the average homeowner stay in their initial 30-year fixed loan? How long does the average homeowner stay in their initial 30-year fixed loan? I'm be checking the chat. How long does the average homeowner stay in their initial 30-year fixed loan? What y'all think? 5 years, 10 years, 15 years, 2 years, 3 years? 5 years. Okay, Michelle said 5 years. All right. Anybody else? Okay. All right, so let's see. So when we're looking at it, right, this is actually according to Redfin, right? So Redfin is saying, move this down a little bit for y'all. I'll move it up. So Redfin is saying if they're millennials, it's usually going to be 5 years or less, 53%. We get all the way over here to the elderly, right? It's about 24%. But on average, you can see that at least 1/3 pretty much of every age bracket, they're standing at 5 years or less. So that's some perspective for y'all. So what is a refinance? So a refinance is simply paying off your current loan and replacing it with a new loan. When you pay off the remaining principal or what you owe, you're no longer borrowing the money, so you don't have to pay any more of the interest, right? So refinance is simply replacing. So somebody in chat, put the word replacing. Put the word replacing. Replace. Refinance is replace. Let's go. I want to see it. Somebody in the chat, put the word replace. There we go. Thanks, Faye. So refinance is simply taking your loan, paying it off, and you're going to replace it with a new one. So we covered what refinancing is. So let's go a little bit further into the benefits. So in the chat, somebody tell me, what are the benefits of refinancing? Just think, what are some of the benefits of refinancing? Or why would you, if you had a home, why would you even want to refinance? What are some of the benefits? Lower payment, lower monthly payment, lower rate, cheaper payment. Yep. All right, so let's take a look. Let's see. So the benefits of refinancing, these are all the benefits, right? You have cash out. This is tax-free. The reason it's tax-free is because it's a loan. So the government's not going to tax you on a loan. Lower interest rate, you got shorter term, you have lower payments, you have consolidating debt, which we'll kind of get into where you can make your mortgage go up, but pay off any other debts, credit card, cars, or other obligations. And then the last one is FHA to conventional. That's going to be to remove the mortgage insurance. So the goal with refinancing is to maximize your benefit and minimize the cost. I'll say it again. The goal is always maximize the benefit and minimize the cost. All right. So when should you refinance? You want to refinance when it makes the most sense for you, your family, and your situation, right? A refinance should hopefully get you at least 2 of the benefits. So let's kind of go through this, right? So let's say you're getting cash out. If you're getting cash out, maybe that's to pay off some debts. Boom, you got two benefits. If you're getting a lower interest rate, if you're getting a lower interest rate, you should have a lower payment, right? Or maybe you're going to FHA to conventional, you're removing that mortgage insurance, you're getting a lower payment. Or maybe it's to shorten the term. If you're shortening the term, maybe you are lowering that interest rate. But typically you want to maximize the benefit. So think of it like this. Let's say right now you have some debts and then you also have some kids going to college in 3 years or 5 years. Just think ahead, right? Instead of refinancing now, and then again in 3 or 5 years, you can say, hey, I have some kids going to college. So you know what? Since I'm doing this, since I have some equity, let me get some cash out, right? And then let me also consolidate some debt. So just think of your situation and holistically, and you want to make the right move for you. Don't be like swayed by a loan officer or a real estate agent. So, all right, let me go back. So what is refinancing? We covered that. It's just replacing your loan, just replacing your loan. The benefits are getting cash out, right? Lowering your interest rate, lowering your monthly payment, FHA to conventional to get rid of the mortgage insurance, right? So now we're going to talk about what determines the interest rate. All right, so the interest rate will depend on a few factors. So you have current market conditions, and then also too, these are like the stuff that you can control, your occupancy, right? So is this your primary, secondary, or investment property? It's going to vary the rate. Your property type, is it a single family? Is it a condo? Is it a townhome? Is it a 4-unit? That's going to determine some things as well. The loan type, is it FHA? Is it VA? Is it conventional? Your credit score, there's usually like buckets or tiers. The higher your credit score, the better your pricing, especially for like conventional and some FHA loans. Your loan size. Typically, if you have bigger, meatier loans, the lenders are getting more, so they can charge you a slightly lower rate because they know there's more meat on the bones for those bigger loan sizes, right? Debt to income as well. So if you have a higher debt to income, what it is, you're going to be a higher risk. So a higher risk is going to, jump the rate up a little bit. Cash out or rate and term. So again, if you're doing a cash out deal, it's going to be more risky. So the rate's going to be slightly higher. And then loan to value, which is equity. If you have more equity, then what's going to happen is you're going to see better terms. But let me cover market conditions. I don't have a slide about this, but I want to hit that really quickly. So the thing is, there are multiple factors that determine interest rate. It's going to be the Fed fund rate, right? It's going to be jobs and employment. It's going to be the 10-year treasury. It's going to be inflation. It's multiple things going on in the world that's going to affect like how the market moves. So actually, let me take you guys to Mortgage News Daily, and I want to show you guys really quickly kind of interest rates and how they look. So here's a market, right? Here's Mortgage News Daily. Highly recommend this site. Let me actually put it in the chat right now for y'all. Give me 1 second, I'm putting it in the chat. You got to go on the site daily too. So Mortgage News Daily, they show you 30-year fix, 15-year fix, where jumbos are, where VA is, FHA, and then you have the ARMs. And you can actually track and trail this. You see this? So you can see how rates went down, when they go up. So we know where interest rates were, and we know where interest rates are. We have indicators of where they should go. So let me just give you my short answer so I don't worry you. So it's projected that interest rates should be tapering off, right? So over the next like few months, so the end of 2024 and early 2025, there's multiple indicators indicating we should be around this mid-high 5 range. So there was high volatility, right? But it's gonna kind of taper off, or at least that's what the experts and Conrad Van, the mortgage man, is seeing from the data, the statistics and the data. So we should be right around this range. I don't see us going back down, but you can always, if you want, again, go on this site, Mortgage News Daily, and you can really kind of zoom in and zoom out. You can pick certain days to see kind of, again, where the market was and where it is right now. So let's get back into the presentation. All right. Okay, let me stop right there. Any questions? Any questions? Y'all have any questions? If not, just put like a fire emoji in the chat. Let me get some participation. Give me like a fire emoji if this is good information. Give me a fire emoji. All right, all right. Okay, okay, all right. All right, any questions though? Any questions, guys? No? Cool. All right, we will keep going. All right, so again, Mortgage News Daily. Here's one of my pricing sheets, right? So this is actually where I will go to price out your loan. So again, a lot of times if someone reaches out to me, they say, hey, Conrad, what's the rate? So as I showed you guys, the rate depends on the market, but it also depends on your risk factors. What's your loan type? What's your credit score? What's your debt to income? Are we doing cash out? Is this your primary? Is this investment? You know, so it's multifactorial. It's not just the rate is 6.2 or the rate is 5.99. It's putting in all those factors and then keeping in mind with the market and pricing it out and seeing where the pricing is for that day. All right, so where do you go to refinance? So let me move this down real quick. All right, so you have three big transactions in real estate, right? The first one you have is purchasing. When you're purchasing, you're using a buyer's agent and using a loan officer if you're financing. When you're refinancing, you're just using a loan officer. When you're selling, you'll use a selling agent. And that's the circle of life, right? Because when you're selling, the buyer will then use a buyer's agent and a loan officer. So, you know, when you purchase, you go to your agent, you get an agent, and then you have Conrad Van, the mortgage man, as a loan officer. But when you're refinancing, there's no agent involved. You would just come straight to me, reach out straight to me if and when you're ready or you want to look at refinancing. And then when you're selling, you can just reach out to an agent and the agent can help put your home on the market and things like that. So where do you go to refinance? You'll go to a loan officer. Somebody in the chat, put loan officer in the chat. Where do you go to refinance? Put loan officer in the chat. Let me see it. There we go. There we go. All right. All right, let's go to the next slide. All right, so we covered what a refinance is simply replacing your loan. Refinance, replace. The benefits. Benefits is getting cash out, lowering your interest rate, lowering your monthly payment, right? Shortening your term, consolidating your debt, getting rid of your mortgage insurance. And usually you want two of those benefits, right? You want to maximize the benefit, minimize your costs. What determines rate? It's multiple, it's multifactorial. But Mortgage News Daily is going to show you a good ballpark of where rates are, where the market is. Now we're going to go ahead and get into the types of refinances. All right, so the types of refinances are rate and term, cash out, FHA streamline, and then VA streamline. So these are the types of refinances. All right, so rate and term, let me move my head out the way. All right, so a rate and term, a refinance that does not pull cash out of your current home. It's just the current loan remains the same. So you're only changing the interest rate and or the term. And the term is like the year, right? So a rate and term refinance, you are only changing the interest rate and or the term. So let's say like you're in a conventional 7.75. A rate and term refinance, you'll just be changing that interest rate and or the term. Also, too, some people don't know you can do specialty terms. So let's say you were in a 30-year fix, you've been there for 2 years, right? You got some equity or you want to refinance. You can do a 28-year rate and term refinance. You don't have to restart over at 30. You can if you want to. You can do 25, you can do 26 years. So it doesn't just have to be the 30, 20, 15. You can do a 27, 28, 29-year term if you like. Our rate and term refinance, we are only adjusting the interest rate and the term. Okay, so conventional, if we're looking at a rate and term, so this purchase, but it's also rate and term, right? It's just going to depend on the type again, right? So if we're right here at a 1 unit, the max we can go is 97. So that means the loan versus the value of the home, 97%, right? And then it's just going to vary and fluctuate for different, if it's a second home or investment property. And then for FHA, if we're doing a purchase or a refinance rate and term, the max we can go, you'll see it right here, 97.75. So this means the loan that we're doing divided by the what the home is worth has to be 97.75%. All right. Now we covered rate and term refinances, and now let's look at cash out. So cash out is a refinance involving you pulling cash out of your property. It works like this. Your current loan plus the cash out amount needs to be less than or equal to 80% of the current value. Again, your current loan. So let's say, let me do an easy number. Let's say your home is currently worth 500,000, right? Easy number, 500,000. And then let's say you currently owe 300,000, right? So the max you can pull out would be 100,000 because that will put you at 80% of the value of the home. So your current loan plus the cash out amount needs to be less than or equal to 80%. Your cash in hand, this is how much money hits your hand or how much money hits your bank account after the transaction. That your cash in hand, how much you actually get back, will be the cash out amount minus your closing costs. Because again, whether you're doing a purchase or a refinance, it's a home loan. All home loans have closing costs, right? So let's say you're getting out 150K. Cool, you take the 150K. Let's say your closing costs were 5,000. Cash in hand, you'll be getting 145,000 at closing. Tap you got it or something in the chat. Say got it. If you got that, say got it. Let me know. Give me some feedback. Let's see. Got it. Okay. Got it. Oh, wait, I think somebody raised their hand. Barbara, did you have a question? You can type it in the chat if you have a question. Yeah, if you have a question, type it in the chat. If you do, okay, I'll wait. I'll come back. Let me know. All right. So the cash out refinance, right? So again, it's like I said, it's up to 80%, but again, that's going to be if it's your primary residence and then it's 1 unit. So let's say it's your primary and it's a duplex or a 3 or 4 unit, it's going to be 75, right? If it's a second home, we're capped at 75. If it's an investment property, multi-unit, we're going to be capped at 70. So your cash out amount, although I said 80, that's just for a 1 unit. It's going to depend on, again, is this your primary home? Is it a secondary home? Or is it an investment property? Okay. FHA, same thing. I just showed you guys this chart, but we're looking at the cash out. Remember, it's going to be 80%. And there's no second home or investment property because remember, FHA just for first-time home buyers for your primary residence. So cash out amount, 80%. So your current loan plus the cash out amount needs to be 80% the value of the home or less. So this calculator is amazing. So let's say particularly if you're looking at or thinking about doing a cash out refinance, you have multiple debts, right? You have, let's say your current mortgage is at 4%. Let's say you have a credit card at 23%. Let's say you have a car loan or something, 14,000 at 7%. Although these are at different rates, this shows you your blended rate. So let me actually put this in the chat, but there's an infinite number of possibilities, right? But I want you guys to see this. The reason I have this is just showing you can get a higher interest rate on your mortgage and it may still make sense if you're paying off other higher interest debt. Now it may not, right? That's why we run your scenario. But at times, if we were able to get you like a 5.5 or 5.3, although your mortgage interest is going up, right? If you're paying these off, you don't have those other payments. So a cash out refinance, although it may, wherever your current mortgage is, it may make your interest rate go up for your mortgage. It may still make sense and it may still be valuable. So I'm gonna go ahead and put that in the chat. Give me 1 second. I think I saved it here. Oh no, I have it later in the PowerPoint, so that's fine. We'll go back to it. I'll put it in the chat for you guys though. All right, so FHA Streamline, FHA Streamline. Okay, so in FHA Stream, let me move this because this is definitely in the way. Okay, so in FHA Streamline, you need to currently be in an FHA loan. Your loan must be seasoned, meaning like you've been in it for 210 days, 6 months, made at least 6 mortgage payments. All that has to be true. Just wait 7 months. Your new loan amount cannot be higher than your current one. There's no appraisal required, and there's no debt to income calculation. So for this loan to work, you need to have what's called net tangible benefit, which for most is receiving an interest rate 5% or lower than you currently have. That's one slide pretty much solidifies what an FHA streamline is. You're currently in an FHA loan, you're refinancing, getting at least 0.5 or lower in your interest rate, and boom, no appraisal needed, no income documentation. We will verify that you're still working, but it's not like a debt to income thing. So this is one of those things where, let's say you need a car and you need a home, you can get a home, then you can get a car, and then you can still do a streamline because we're not looking at debt to income. So just that there. And then VA streamline, we'll get into that. It's much the same thing. So the VA streamline is actually called an IRRL, which is IRRL. Sounds weird, but that's just what it is. It's an interest rate reduction refinance. So you need to currently be in an FA or a VA loan, still live in the property as your primary residence, right? Loan must be seasoned, so 210 days, 6 months, at least 6 mortgage payments. Funding fee, 0.5%. If you're disabled, the funding fee is waived. Your new loan can't be higher than your current one. And again, no appraisal, and there's no debt to income calculation. Right? So that is the, all right. So let's review. So we covered what a refinance is. Somebody in the chat, tell me, what is a refinance? Starts with the R, the word I said earlier. Maybe the word was replace. I don't know. Maybe I said replace. Let's see. Replace totally makes sense. Okay. So refinancing is simply replacing your loan, right? The benefits. Who can tell me in the chat? And I got the chat open. In the chat, what are some of the benefits of refinance? And I mentioned like 6 of them. Give me at least like 2 or 3. What are some of the benefits of refinancing? Shorter term, yeah. Lower rate, lower rate, lower rate. Oh, y'all really want that lower rate, huh? Y'all not playing. Cash out, okay. Lower payment, yes, yes. And okay, so you usually want how many benefits when you're refinancing? 2. Good job, good job, good job. All right. Types of refinances. We covered that. What are the types of refinances? What are the types? Or your favorite type? Rate and term, yeah. Rate and term, you're dropping a rate or the term. Rate and term. Cash out, yep. Cash out, yep. IRRL, yep. Interest rate reduction refinance, yeah. FHA streamline. All right. Good, good. Okay, let's move forward. Okay, so qualifying for a refinance. So you need a positive credit profile. Well, 3 things you need for a home loan: positive credit profile, durable income, and cash to close. So 580 plus for an FHA, VA, but VA really, I mean, you can go down. VA doesn't look at your credit score, really. It's mainly just on-time payment history for 12 months. Conventional, you want a 620 plus. Now, if you're doing a streamline refinance, we just need to show that you've made on-time payments for at least 6 months. That's it. We're solid. So second piece for a loan you need is durable income. You need to meet the debt to income requirement. If this is streamlined, this is waived, right? So you don't have to worry about that if you already own the home and we're doing a streamline. And the last piece for a loan, whether you're purchasing or refinancing, is you need cash to close. Cash to close is down payment, or are you putting zero down, VA? Are you putting 5%, 20%? And then the closing costs. Now, I said, since we're looking at refinancing, there is no down payment because you already own the home, right? So your cash to close, the money you need to bring in, is just going to be the closing costs. Now, depending on the loan type, right, the closing costs can be paid for or rolled into the loan. You're doing a cash out, getting 100,000 out. The closing cost is 5,000. So the cash in hand is 95. Does that make sense? I'll repeat myself if y'all didn't get it. You're doing a cash out, you're getting 100,000. Your closing cost is 5,000. The cash in hand you're going to get is 95. So you can, if you're doing a cash out, the closing costs will be subtracted from that. If you're doing a rate and term and you have enough equity, you can roll it into your mortgage as well. But nonetheless, there are still closing costs to do any loan. So sometimes you'll get stuff in the mail, it'll say, no closing costs. They lying. I mean, they can pay for it, but it's misleading. Anyway, so I want to show you guys this. I know it's like, this is kind of what I look at every day, but I'm gonna just show you what I want you to look at. So if you look right here, right, I can do a purchase or a rate and term refinance if you have no 60-day lates, right? You got to put 20% down. If you're doing a cash out, it's up to 25%. You got to have that equity, right? Let's go over, and you can have chapter 13, right? You can have chapter 7. And even over here, right? If you're purchasing, doing a rate and term, you can't do a cash out, but up to 120-day late. So now I'll tell you this, the rates on this will be higher, right? But nonetheless, there are other programs and options I have if you don't fit into the traditional buckets. So again, you don't have to look at all this. This is all the other what if scenario stuff. But ultimately, I'm saying, even if you had a 120-day late, I can still help you purchase. We can still do a rate and term refinance. All right, so what we covered, we talked about what a refinance is. Refinance is replacing your loan. The benefits, you can get cash out, you can lower your payment, lower your interest rate. What determines the rate? A bunch of different market factors, right? Where do you go for your cash out refinance? You go to Conrad or your VA Earl, Conrad Van Mortgage Man. The types of refinances, cash out refi, Earl, FHA, Streamline, a few others. And we also talked about qualifying for a refinance. Let me ask you guys a question. Okay, so do we check your debt to income ratio for a streamline? Yes or no? Do we check your debt to income ratio for a streamline? No, no, very good, very good. Very good. All right. All right, let's review a loan estimate really quickly. All right, so here's a loan estimate. So a loan estimate is a legal disclosure. So whenever you're doing a mortgage, this is the actual like legal disclosure you'll get. You'll get a few. A lot of it, sometimes y'all are like, I don't know what I'm signing, but I'm just signing this. Yeah, so let's I'm gonna break it down a little bit. So on your loan estimate, right, you're gonna have the date it was issued. You're gonna have your name, your address, the property. You're gonna have the sales price right there. The loan term be 30-year, or like I said, 28-year, right? 27-year, whatever. Purchase, and if you're refining right there, it'll say refinance. It'll be a fixed rate if you're doing a fix. The loan type, right? Conventional FHA, VA. Is the rate locked? Yes or no? You're gonna have the loan amount. Can this change after closing? No. Interest rate? No, it can't change after closing. Monthly principal and interest payment. Prepayment penalty. This is for the specialty loans. It's not really the FHA, VA conventional. There's usually not going to be a prepayment penalty. Maybe if you're doing like a down payment assistance for that second, it's whatever the obligation is. Balloon payment, that mean, is there a big or large lump sum due? Usually that's a no. So again, the calculations, your principal and interest payment, this is over the 30 years, right? You see the principal and interest stays the same, but you'll see that the mortgage insurance dropped off. So the estimated payment may be lower, right? And the only thing that changed is, again, we have a conventional loan, the mortgage insurance drops off. So now we also have the escrows. This is going to be taxes and insurance. So you'll see here, this amount can increase over time. So this is a whole nother PowerPoint I could do for y'all, but just keep in mind your property taxes and your homeowner's insurance, they may go up. So if they go up, this amount can go up, right? But this is just a projection using what we know, right? And let me move this because there is a little piece down here I want y'all to see on the loan estimate, page 1. So you have the closing costs, all the fees to do the loan, and then the cash to close. Again, the difference, closing costs, how much does it cost to do the loan? Cash to close, what is the total you need to bring in to close this? Now, if you're a veteran and you're putting 0 down and the seller is doing concessions, you can potentially be getting a check back. It just depends on the numbers and if they're giving concessions. Yeah. But that's purchase and we're talking about refi. So we'll go. So the next page you'll see on the loan estimate, again, it's a 3-page document. You're going to see the loan points, if there's any points, application, underwriting, processing, all the fees. If you're like shopping lenders, you mainly just want to look in box A. All these other fees will pretty much be standard, right? Title, like C, this is based off of whatever the title fees are. So that's not like the loan officer, that's the title company. These fees, appraisal, whatever we're charged for the appraisal, you get charged, like a flood certification, tax monitoring fee, all those will be the same regardless of the lender you go with. So if you're shopping lenders, you got multiple loan estimates, you want to look in box A, what is the rate and what is the cost for it, right? And then down here, D, this is A, B, and C together. So A, B, C. So D is A, B, and C. So you have the total charge there. And then same on this side, taxes and other government fees. That's just based off of the county or the state. If there's any taxes or transfer taxes that are due, prepaids. So, okay, I'll just break it down just a little bit. So prepaid interest is like the day we close. So let's say we close on the 15th and there's 15 days left, you'll pay 15 days of interest. If we close on the 1st and there's 29 days left, you'll pay 29 days of interest. So this will change according to whatever the closing date is, right? And yeah, so you have I, that's E, F, G, and H. All those together will make I for you. And then D, remember D is A, B, C. So that's D. And then I is these together added. Boom. So that's your total. And then lender credits. So when you're refinancing, you won't have this down payment that's not needed, right? You won't have a deposit because you're not depositing, but you will still have the closing cost there, right? Seller credits, again, that's if you're purchasing and they have like some credits. So that's like a loan estimate. We kind of like reviewed it. Hopefully your loan officer reviewed it. Page 3, this is just more information for you. So you have all your loan officer's information. So like you work with me, it'll say Conrad Van, the mortgage man. It'll have my federal license. It'll have email, phone number. All right, so we covered what a refinance is, right? We covered the benefits of refinancing. We talked about what determines the interest rate. Where do you go to refinance? Question, where do you go to refinance? Let me know in the chat. And actually, while y'all do that, I'm gonna post a link in the chat for y'all. Let me know in the chat, where do you go to refinance? Account link. Let me go back over. Let me see what y'all saying. Loan officer, that's right, that's right. Okay, I'm gonna post this. Y'all should all have it, but that's my link there. Okay. Okay, so let's go over the documents needed for a refinance, right? So that's pretty much the last piece. And then I'll have any questions. I'll see if I can turn the cameras on. So if y'all have questions, y'all can just come on and ask. But the documents needed for a refinance is going to be, let me move this out the way. Yep. Unexpired government issued ID. Make sure it's not expired. If it's expired, we can't use it. So liabilities, again, when you're refinancing, you have a mortgage. So that mortgage statement, homeowners insurance policy, just the declarations page. HOA, if you have a homeowners association, send that too. 2 months of bank statements, all pages, whatever accounts we're using. You might have 3 accounts, 4 accounts, 5 accounts, whatever accounts we're using. And typically, this isn't really needed because, especially if we're doing a cash out, you're not like bringing money in. So it's not like, show me 10,000, 12,000 a down payment. It's more of, do you have the closing costs if they're not paid for? And then the 30-day pay stubs, W-2s, and let me move this out the way as well. So when you're refinancing, it's all the standard documentation, just like you're purchasing, because you're replacing that loan. So we have to make sure you qualify again. Unless you're doing a streamline refinance. So when you're doing a streamline, it's called streamline for a reason. We still need that ID, right? Mortgage statement, your homeowner's insurance, the mortgage note. So your mortgage note, you can get this when you signed all the papers. It's going to be in there. If you forgot, you can reach out to title, or you can reach out to your previous lender to get your mortgage note, right? Assets, again, 2 months of bank statements. Typically, we may not need bank statements, especially if we're doing a streamline. Just show us like you have the monies and we're good there. And then sometimes we'll need like a recent pay stub, but usually we don't even need that. But we will verify you're employed, but we won't need the pay stubs. So that's a streamline. All right. So again, what is a refinance? Put it in the chat, put it in chat, put it in chat, put it in chat. What is a refinance, y'all? What is a refinance? Hopefully somebody says replace. Yes, replacing your loan, replacing your loan. Okay. And what determines the rate? There was a bunch of factors. Just give me like 1 or 2. What determines the rate? You say loan type, property type, credit score, market factors. What determines the interest rate? I just gave y'all like all the answers. What determines the interest rate? Market, yeah, yeah. Anybody else? Occupancy, yeah. Because if it's an investment, it's going to be a higher risk, so it's going to be a higher rate. Yeah. Okay. Loan to value, yes, your equity as well. All right. And types of refinances. What are some of the types? I think we covered 4. What are types of refinances? What are the types? Streamline, yep, you got a streamline. Grow, yep, interest rate reduction, refinance. Don't forget 3 R's, 3 R's, but yes. All right, and yeah, so that is pretty much it, y'all. So have the resources. So if you scroll up on the chat, I already have Mortgage News Daily in there. Let me try to send y'all this blended rate calculator. Or actually, I'll just send it to y'all. I got y'all email. Y'all signed up. I'll just send it to you. But yeah, those are some of the resources. My contact information on the chat, I did put in my Calendly. So if you actually want to look at doing a refinance with me, or you want to run the numbers, let me show y'all. Put it in here. I think I did. I did right. I'm not tripping. Yeah, there we go. There's my link right there. Conrad Van the Mortgage Man, 15 minutes. So like I said, we can look at your scenario. You can tell me your debts, your income, and we can see if it makes sense. Or if you know anybody else too, you can send them my information. We can set a call free. It's not like you're going to call me and I'm going to pull your credit. Like, we will talk through and make sure the situation works before we proceed. But yeah, this is all my contact info. Conrad Van the Mortgage Man on like all social media platforms too. After this, I'm gonna make a TikTok. I'll make a little TikTok. So, all right. So why use me? So you guys sat through the presentation, want to let y'all know. So traditionally you'll go to like a big bank, right? Like a credit union or like Wells Fargo, Chase, whatever. But they have a hierarchy of management, and that's mainly a hierarchy of fees, right? So that's just going to increase the fees because they got a lot of people on payroll. You can come straight to me, Conrad Van the Mortgage Man, through Next to Mortgage. I actually shop over 200 wholesale lenders. So wholesale lenders, they have a bunch of different products, and they have a lot lower rates and fees. So I can cut out the fees and you can work with me directly. I don't like transfer you to somebody else. You like work with me. I'm actually the licensed loan officer, right? So yeah, and I have a ton of different products. And yeah, okay. And here's why you work with me. Check this out. Check this out. So this is like, I want y'all to look at the date. I want y'all to look at the date. So this was a client that came to me like early December. And she basically said, I have to be in the home by Christmas. I have to. And so we got everything submitted mid-December and I closed her December 20th. So when you work with me, this is the level of customer service you're going to get. Now, I tell people 2 to 3 weeks, but I do, of course, try to close faster. But this is just so you know, like, hey, like the expectation is like 2 to 3 weeks. If it's a clean file, everything is good to go. But of course, I'm always going to try to go above and beyond for my clients, even during the holiday times. Like if you're shopping or you're trying to lock in and get property, you can still reach me and I can still make sure we get everything squared away for you. So company license in 48 states. I think my license is like in 15, all the main states, Texas, Georgia, Illinois, Florida, North Carolina, but just tap in. I can get you connected. I'm pretty much available. Call, text, email me whenever. And yeah, that's pretty much it. Like that's the last slide. Like that's the last. Let me see if I can, if y'all have any questions, put them in the chat. I want to see if I can enable like the videos. I don't think y'all can let me see. Share sound. But yeah, if you have any questions, you can go ahead. Oh, I see the chat going. Let me see. Thank you. Thank you. Yeah, if y'all don't have any more questions, you can kind of log off. Like that's cool too. You got my contact information. Reach out if you need anything. If you have any questions, just put them in the chat and I'm gonna hang around for a bit and answer any of the questions. How you know if you have equity? Okay, so quickly you can check, what is it, like Zillow, Redfin. Don't tell your agent I told you that. Zillow, Redfin. And that's going to tell you the estimation of what the home is worth. And then when you have the estimation of what the home is worth, look at your mortgage statement. That's going to tell you how much you owe. And that'll tell you the equity. So equity is going to be like the difference in what it's worth versus what you owe. And let me see. Yeah, I don't think I can enable videos. I'm sorry, friends. I should have enabled the videos. I want to see y'all face. Thank you for answering my questions. Is it a good time to try to refinance? Refinancing depends on your situation and where you're at. If you call me, text me, let me know. But if you bought your interest rate is like 7 FHA or VA, I would say yes. But there's a lot other factors to consider. Maybe you've been in your home a little bit longer, things like that. So I would need to know your scenario. But remember, as long as you got 2, mine's 5.5. So it depends how long you've been in your loan and if you're looking to pull cash out. Bought 2 years ago. So if you bought 2 years ago, then are you looking to pull cash out? So one, we need to see, did the home go up in value? And if there's a possibility for you to pull cash out. Other than that, because that's kind of like I showed you guys where the market is, you're kind of where the market is. You wouldn't want to refinance just to have closing costs if there's no benefit. So yeah, I would stay where you're at. Can you refinance from FHA to conventional? Yes, yes, you can. Yes, you can. Yes, you can. But remember, that's not streamlined, so it'll be full doc. So show everything, debt to income, you got to qualify, but yes. Usually people will get into the home FHA and then they'll refinance conventional to knock off the mortgage insurance when they have enough equity. Mhm. Any other questions? Y'all have some good questions too. Y'all have some good questions. Any other questions? So I don't think I was able to have, let me see, we should have went like live on Facebook or something. But okay. Any other questions? Y'all got my contact information. Reach out. I appreciate you for coming. Peace.